Hello everyone. We had some fairly major moves yesterday. First off, the pound gained substantially as unemployment in the UK fell faster than expected. I've been bullish on the pound for some time and see no reason at all to cut positions at this point. Secondly, the Bank of Canada's quarterly monetary policy report said that their currency remains strong and will continue to pose competitiveness challenges for Canadian exports. The Bank of Canada also lowered their inflation forecast and hinted that their next move in rates could be down as well as up. I expect the Canadian dollar to remain weak for some time, as this trend seems to have the full support of the Canadian authorities as well as fundamental justification. Verbal intervention by the authorities is a lot more effective when it's just suggesting to traders that they do what logic dictates the traders should do anyway. The surprise in the markets was the reversal in the Australian and New Zealand dollars, despite encouraging economic news or domestic economic news from both of them. The reason for their decline was the fall in the flash manufacturing PMI for January in China to under 50. I expect the Aussie dollar to continue to move lower, contrary to what the market concluded after Wednesday's CPI figures. And I also look for Aussie and Kiwi to decline further, as Australia remains more sensitive to the restructuring of the Chinese economy that's going on than New Zealand. New Zealand's exports to China are largely agricultural. They may actually benefit from a restructuring of the Chinese economy that puts more money into the hands of Chinese consumers. But Australia's mineral and energy exports to China could decline as they try to cut back on investment. Today is PMI day globally. Following the lower Chinese manufacturing PMI, we get preliminary PMIs on both the manufacturing and service sectors from Germany and the Eurozone as a whole. Germany and the Eurozone's releases are expected to be up in both sectors. That could support Eurodollar during European trading. Now, the market manufacturing PMI for the US is coming out too. That's not as widely watched as the ISM index. So even though it's expected to rise, it's not clear whether that would have any impact on the market. We also have a lot of other statistics out from the US today. I think the main one in focus is going to be the jobless claims. Initial claims for the weekend ending January 18th are expected to have risen just slightly, but the key here is going to be the continuing claims, which are forecast to fall. Last week, if you remember, the dollar ignored the better than expected initial claims and also a good CPI figure, and fell on the higher continuing claims. So a decline in the continuing claims this week, almost back to where they were, could support the dollar. We're also expecting a rise in existing home sales in December, which would also be dollar positive. So the outlook would be for a higher Eurodollar during European time and perhaps a reversal during US time. For technical analysis and more trading ideas, please see the full comment on our website, IronFX.com. You can also follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google+ to get more trading ideas. This is Marshall Gittler, head of Global FX Strategy at IronFX, wishing you solid trading.